Good morning, all of you. Once again, welcome to your channel DEBITO Baba. And today we'll discuss past adjustment with certain examples. In my previous video, I have discussed something about the meaning and the criteria for which the adjusting entries will be prepared. But today we'll take one by one examples and discuss the past adjustment. So here in the first slide, you see I have classified the past adjustment in two broad categories. If you go through the questions and you will read the question, you will find two types of mistake will be there. One is omission of terms and conditions of the partnership deed, omission of terms and condition of the partnership deed, and wrong profit sharing ratio. That means it is clearly indicated from the above two lines that all the numericals related to the partnership past adjustment broadly divide into two categories. For this, you have to read the question carefully. If you read the question carefully, you will find in certain questions the deed will mention certain terms and conditions of the partnership deed. That means some partner will get interest on capital, some partner will get salary, some partner will get commission and remuneration, and interest on drawings will be charged on them. So these things are known as terms and the condition of the partnership deed. That means at the end of the accounting period, the partnership firm should record all these appropriation related transactions in the appropriation account, and the remaining profit they should distribute between partners in their agreed profit sharing ratio. But in certain questions you will find the partnership deed, the partnership firm earn certain amount of profit, but what the partners have agreed upon, they could not appropriate the amount towards the partners, but divided the total profit in their original profit sharing ratio. This is one kind of group of mistake, I will say, because I am broadly classifying the past adjustment two group. One is only the terms and conditions of the partnership deed ignored, and the total profit has divided between the partner in their agreed profit sharing ratio. And the another group is that another group of mistake, another category of mistake I can say, that means the terms and condition they have ignored, and they have ignored the original profit sharing ratio, but they have distributed the profit without taking into consideration the terms and conditions of the partnership deed and divided the profit in a wrong ratio. So two type of groups I have made. One is only the terms and conditions they have ignored, and the profit sharing ratio perfectly they have used at the time of distribution of the profit. But in the other cases, I am saying that they have ignored the terms and conditions of the partnership deed. Side by side, they have committed a blunder by taking a wrong profit sharing ratio instead of the agreed profit sharing ratio. So that's why this slide totally based on two broad group, that is terms and condition ignored, profit sharing ratio, agreed ratio they have used, terms and condition ignored, and the profit sharing ratio is wrong. Right? So in the second slide, omissions of the terms and condition of the partnership deed. See, when I'm taking this point, omissions of the terms and conditions of the partnership deed, that means only omissions. The agreed profit sharing ratio they have used perfectly. So here omissions, as in the slide I mentioned, that terms and conditions of the partnership deed means that interest on capital, salary to a partner, commission to a partner, and interest on drawings they have ignored. In a question you may find one item, that may be IOC, or maybe two item IOC salary, or maybe three item interest on drawing, etc. Right? So this group is known as only the terms and condition mistake. They have not taken into consideration, they have totally ignored that fact while recording or distributing the profit. So in this type of situation, remember, you have to prepare an adjustment table directly. What you will do there, you will start the adjustment table, number of partners plus two columns. One column is particular, another column is total. That means if three partners are there, then you have to prepare five columns. One column for the particular column, and A, B, C, three partners column, and the last total column. Remember, the total column will help you to take the judgment. And this is the most important column, that is the pathfinder for us to take a decision, to take a judgment, right? So in the third slide, if I will go, example 1 I have taken here, example 1, see the example 1, right? A, B, C are partner in a partnership firm, right, contributing rupee 1 lakh, 2 lakh, 3 lakh each as capital. The partnership deed provides an interest on capital at a rate of 10% as per annum, and the interest on drawings will be charged at a rate of 6% per annum, right? And the drawings particular, in the drawings, particular year in the interest on drawings calculated for ABC is 1,000, 2,000, 3,000 respectively. A is entitled to receive a salary of 26,000 per annum, and B is entitled to get a commission of 30,000 per annum. During the year ended 31st March 2020, the firm earned a profit of 5 lakh, and it is credited to them in their profit sharing ratio. See the line, in their profit sharing ratio 2:2:1. That means this is the agreed ratio. Now, without taking into consideration the terms of the deed, that means what they have done during the year 2020, they have earned a profit of 5 lakh, right? Instead of considering the terms of the partnership deed, that salary, commission, interest on capital, and interest on drawings, they have totally distributed the 5 lakh profit in between them in their agreed ratio 2:2:1. So from the above question, it is evident from the question that they have committed only the mistake at the time of appropriation. That means they have totally ignored the terms and conditions, but they have distributed the profit in their agreed ratio. So in this type of question, directly we'll go to the adjustment table, because only the appropriated part they have committed mistake. So what we'll do, our task, our focus at this type of situation is totally, we have to focus what are the amount the partner is going to get. So that's the point. So what I will do here, in the adjustment table, I will mention interest on capital to be credited. That is the things the partner has to take, should take. Rather, I should say should take. So I will mention interest on capital to be credited, interest salary to the partner to be credited, commission to be credited. Now interest on drawings to be debited. Remember, this is a very interesting one. Interest on drawings calculated ABC given 1,000, 2,000, 3,000 respectively. That means they have ignored this interest on drawings. So to interest on drawings ignored. So what we will do, if we will take into consideration, that means the partner's capital we have to deduct, we have to debit. So that's why in the adjustment table, when you will write interest on drawings to be debited, you have to write to be debited. See, all the items I mentioned to be credited, but here you have to write to be debited, because that we are going to reduce the capital of the partners as interest on drawings. So 2,000, 1,000, 3,000 respectively will deduct from their capital account. So that is the point. That's why you have to mention interest on drawings to be debited. Alright. So in the solution part, in the next adjustment table I prepared here, see here, it's clearly mentioned. I have 3 column, A, B, C is there. Unfortunately, A is not there, right? Unfortunately, it's a mistake on my part, right? Sorry. IUOC to be credited 10,000, 20,000, 30,000, 10% per annum given. So total amount 60,000. Salary to be credited only to the A, 26,000. B is 20,000. B is nothing. C nothing. And the commission to be credited only to the B, 30,000. C will not get anything. So that's the point. Total amount is 30,000, right? So the total, if I will calculate it here, one mistake also I have committed here, that is in the total column we have to mention 20, not 20, it's 26,000. Sorry, right? So excuse me, pardon for that. So interest on drawings 1000, 2000, 3000, 6000, right? So if I will go for the total of the A column, 26 plus 10, 36 minus 1, 35,000, net amount is going to get 20,000, 30,000, 50,000 minus 2,000, because interest on drawings to be debited, we have to debit that. So total net amount 48,000 is going to get, 30,000 minus 3,000, 27,000 is going to get, and here 60,000. Once again I beg sorry, because here 26,000 the total amount. This is the 26,000, remember, because this is 26, this is 26,000. A is salary to be credited, but unfortunately I have typed here 20,000. This is 26, sorry once again. So this is 60, 26, 36 minus 6, it will come 1,10,000, right? So this is the amount, this particular amount. See, I am indicating here pointer, this particular amount 1,10,000. 60 plus 50, 1,10,000, 1,16,000 minus 6, 1,10,000. This side also 1,10,000. If you'll go for total, this 35, 48, 27, it will 1,10,000, and this is 60. This is 26, mistake. This is 26. This is 30 minus 6. It will come 1,10,000, right? So that 1,10,000, what they have done, they have not given to anybody, right? Rather they have taken in their agreed ratio, that is 2:2:1. So 1,10,000 they have taken 44,000, 44,000, 22,000, right? So that means in the previous table you see, right, the total here, he has to get total 35,000, A has to get 35,000, B has to get 48,000, C has to get 27,000, right? But already they have taken 44, 44, 22. So A 35,000 should take, but taken 44. So 9,000 taken more. That's why I have to go for debit. And this B 44,000, he has already taken, but he has to take 48,000. That means 4,000 he will take. For 4,000 is the credit. And C 22,000, but C has to take actually 27,000. He has already taken 22. So that's why 5,000 we have to go for credit. So the adjusting journal entry will be A's capital account debited to B's capital account to C's capital account, 9,000, 4,000, 5,000. So this is the adjusting journal entries. The adjusting journal entry, A's capital account debited 9,000 to B's capital account 4,000 to C's capital 5,000. Remember, my dear friends, while reading the question, read it carefully, mindfully, tactfully, because sometimes the question may mention fixed capital. If you'll find a fixed word in a question, then the adjusting entry will be the A's current account 9,000, B's current account 4,000, C's current account 5,000, like that. You have to write the answer. So omission of the terms and condition and wrong profit sharing ratio, our next category of mistake. In certain questions, in certain numericals, you will find that the partnership firm, they have distributed the profit in a wrong ratio. Side by side, they have ignored the terms of the partnership deed. In that particular situation, as you people are the beginners of the past adjustment, right? So you do one thing, in a working note, you prepare a profit and loss appropriation account as per the original deed, right? You prepare roughly, right? That means if the same question, if you take into consideration in that particular question, right? Example 1, we have to mention interest on capital to be credited in the appropriation account debit side, salary to be interest on capital appropriation account debit side, and salary debit side, commission debit side, and your by net profit, and here by interest on drawings. Everything will put, and the difference will get share of profit. That share of profit will distribute in their original ratio. You will prepare the profit loss appropriation account of the partnership firm as originally, right? After that, what we will do, we will go for the adjustment table. What you will do in the adjustment table, once you have prepared the profit and loss appropriation account, then your job is very easy. The thing is that you have to just copy and paste the things what you have noted in the debit side of the profit and loss appropriation account. So one by one you will note interest on capital to be credited, salary to be credited, फिर उसके बाद salary to be credited, commission to be credited, and interest on drawings to be debited. and the last, the total column total what will derive, that you will mention already credited, and after that you just compare and you will get your adjusting entry, right? Now the last credit of interest on capital. Some questions you will find only one item they will mention, and the question task will be given like this. The partnership did provides for 10% interest on capital, but the partners have credited only 8% per annum interest on capital. That means 2% interest on capital omitted. So in this situation, you prepare direct adjustment table and mention 2% IOC to be credited because they have omitted. So you have to give them. So that's why you have write 2% IOC to be credited. Calculate 2% IOC. What is that particular amount? You put individual in the individual column, the partners, and the total amount what you will derive, that total amount they have already taken as share of profit. So mentioned in the next line, already credited the total amount as share of profit in the profit sharing ratio. Now compare and you'll get the answer. If reverse case, if the partnership did provides for 10% per annum, but the partners have taken 12% per annum, in that situation they have taken 2% more. That should not, they should not do that. Unfortunately and mistakenly, by mistake, they have taken 2% more. Now simple question I will ask you here, if they would have not taken that 2% more, then what will they do that particular amount? They will distribute as share of profit, and that should be credited as share of profit instead of 2% interest on capital. So first we will calculate in a working note what is the 2% interest on capital. The total amount what will derive, that amount should be credited as SOP. So our first line in this particular situation will be excess interest on capital to be credited as SOP. Excess interest on capital to be credited as SOP. We have to mention there. And after that, we will write already credited as excess 2% interest on capital. Already credited, that has been. So we will compare, we will get the idea. Right? Next. When there is a mistake only in the profit sharing ratio, in some questions we will find certain mistake will be there in the profit sharing ratio only. Let us assume in a particular year 2020 they earned a profit of 5 lakh and the original profit sharing ratio agreed upon between the partner is 2:1, right? But what they have done, they have distributed the profit in 1:1:3. Original ratio is 2:1, but they have taken at 1:3. In that particular situation, you will write direct adjustment table, mention rupee 5 lakh to be credited as SOP in 2:1, 2 lakh, 1 lakh. Already credited rupee 5 lakh in 1:3. That means 1 lakh, 3 lakh. Now compare, right? First you write the original rupee amount to be credited as SOP, already credited as SOP. But in certain questions you will find multiple years. The question will provide multiple years of profit, and their agreed ratio is 2:1, but during all the years they have taken 1:3. See, in this particular question 3 years are there, but the profit sharing ratio throughout the 3 years has not yet changed, only 2:1. So you do one thing, total amount of profit, it means the full 3 years total amount of profit you take into consideration and note down this much of profit to be credited in 2:1 and already credited in 1:3, right? If in a question profit sharing ratio is changing every year, first year their agreed ratio is 2:1, second year their agreed ratio is 3:1, and third year their agreed ratio is 5:3. Different ratio, different year, original ratio. In that situation, and they have distributed the profit wrongly also. They have not taken all these agreed ratio. They have taken another ratio. In that situation, you have to write individual year. That means amount of profit to be credited in the year 2014, 2:1, that much of profit. Amount of profit to be credited in the year 2015, 532, that much of profit. Amount of profit to be credited in the year 2016, 113, that much of profit. That means original agreed ratio you have to mention every year, and you have to distribute the profit. And after that, you will what will do, and the wrong part also you will write there. Amount of profit already credited in the first wrong ratio, amount of profit already credited in the second wrong ratio, amount of profit already credited in the third wrong ratio. Like that, after that we will compare, right, and we will get the adjusted amount. Clear? So this is end of our session. I think all of you understood. Remember, my dear friends, students, and beloved students, this is your channel. You like it, you share it, you subscribe it, and enhance my knowledge, your knowledge, and other knowledge also. Thank you. Have a nice day. Goodbye. Signing out from the DEBITO Baba.